just set the stage here a little bit. I've spoken at SALT the last few years, and every year there are more and more crypto panels. And I don't think that's just because Anthony is so into crypto. I think it just shows you how it's really permeating Wall Street. People are really interested. Of course, right now, we are in a crypto bear market, not just crypto. We'll get into that, but very interesting. Every year at SALT, I see more crypto panels. You love to see it. These are two smart people who can talk about it. Christine, let's just start with this, and David will do the same for LMAX Group, but just tell everyone exactly what Apollo is up to the extent that you can share, in crypto, and what your day-to-day is like. And we should mention, of course, you're still settling in at Apollo after leaving JP Morgan.
That's right. Month 2 at Apollo from JP Morgan. But just to level set for everybody, Apollo Global Management is a $500 billion alternatives asset manager with over 30 years of experience in public and private equities, fixed income, credit, asset management, and insurance and retirement services. We've entered the digital asset space in a very unique way. On one side, looking to be a real-world practitioner of the technology, and this is kind of where my background at JP Morgan was really applicable, in terms of identifying and driving real-world use cases using blockchain technology, putting real-world assets on chain, and then also investing in the space as well, and hoping to create a flywheel where essentially the companies and protocols that we invest in will use and share our cross-asset markets expertise, helping to make those protocols and companies more successful and therefore our investments more successful. So really exciting platform, so more to come.
We like the flywheel. And David, tell everyone about LMAX Group. You guys are kind of, I would argue, quietly doing very big numbers and recently launched futures trading for 6 different cryptocurrencies.
Yeah, so hi everyone. LMAX Group, we operate 6 exchanges globally. The 5th exchange we launched was LMAX Digital, and that's the main reason we're here today. So last year we traded over $5 trillion in total. About 10% of that was in crypto, which was LMAX Digital. So we averaged last year around $1.5 billion a day. Initially then it was only spot, so spot crypto. The leader by far, by the way, in terms of our instruments is BTC USD or Bitcoin. And what's interesting perhaps in terms of the whole of traditional markets is that last year across all our assets and across all 6 exchanges, Bitcoin was the 8th most traded currency pair. Eurodollar is always the world's biggest currency pair, but Bitcoin came in at number 8. Obviously this year it's dropped down the rankings a little bit, but it's still there. We're squarely trying to build an institutional ecosystem or help build an institutional ecosystem. And as you said, Dan, you know, we announced the launch of 7 days a week futures. It's important. The futures product that's out there at the moment is not fit for purpose. It's 5 days a week in a 7-day-a-week market. So we announced that, and that means that we can accommodate all our sort of core clients, which are the biggest banks in the world and the biggest non-banks in the world, to trade both spot and futures.
Yeah, crypto does not sleep, which can make it exciting and also brutal to cover the crypto news cycle. Trades 24/7. Let's talk about the market a little bit. You know, when we talk about institutions getting into crypto, you know, it's funny, I know Mike Novogratz is speaking at this conference, and he famously a few years ago said, the herd is coming, in reference to big institutions buying into crypto. And then about a year ago, we were at a conference together, and he said, the herd is here now. But if it was here, if the herd came, well, they haven't enjoyed the past 6 months or so, since May, right? And so it's maybe a tough time to be making the pitch to big institutions that this is the time to get into crypto, unless it isn't, unless this is the opportunity. Christine, what are you kind of hearing from people? And right now, with prices the way they are, especially, you know, Bitcoin, Ethereum, but really all the crypto market, and of course stocks, not just crypto. But are you seeing a lot of people maybe pull back on their interest in diving into crypto assets?
Yeah, I mean, I think it falls in 2 camps. I think on one side, if you were always very skeptical of the crypto and digital assets markets, you're finding validation in this market where you're like, oh, well, no real world use cases anyway. Like, you know, like I knew this was going to happen. Was kind of maybe one side if you were already on the far end of skeptical. Although not a lot of people like remain there because there's been so much progress from a technology perspective and from a market perspective that it's actually hard to like hold that position. I think at least, you know, the other camp, which is probably the camp that we fall in, is that it's actually a great time to buy, like a great time to invest. And especially for someone who's starting, a great entry point. For us at Apollo, we really like to pride ourselves on being value investors where purchase price really matters to get outsized returns across the risk spectrum. And so, for those investors that are institutional investors that are just starting to enter the space, this is a great entry point.
Now, of course, even that, though, when you say, oh, but it's a good time, this is actually the best time to buy, when it's a prolonged bear cycle, that starts to become an object of ridicule too, right, David? Like, the people who are already skeptical on crypto, they point to the people saying, no, this is a great buying opportunity, and they say, well, then it went even lower. So, how low can it go? And it starts to become, people really stick to the tribe of what they already believe in.
Yeah, look, two things on that. You mentioned tribes and herds, right? The truth is, there is a crypto tribe. There always has been a crypto tribe. It's mostly retail-driven right now. The institutional herd had not come. They are coming, but it's that famous Al Pacino speech. They're coming inch by inch. They were coming inch by inch in 2020 and 2021, and now it's the same in 2022. Probably the proxy for it, not just selling my own book, is probably LMAX Group. So all of the world's largest banks trade foreign exchange with me. Here's the fact today, none of them trade crypto with me. So there's your herd, because they are the gatekeepers to all the institutional money in the world. But when we launched LMAX Digital 2018, we called 35 of the largest banks who trade with us and said, hey, any interest in crypto? They said no. They said, do you want access to our market data? They said no. We said, well, you take our market data in all the rest of our exchanges. And they said no. So here you go. Today, 14 of those 35 take our market data today. They're using it for price discovery. They're getting ready. But there's 4 things every institution in the world can do. They can, banks mainly, they can invest in it, they can trade it for themselves and for their customers, they can clear it, and they can store it. And probably, what is it? Spot and derivatives. I would say today, they've all invested in it. So there's 2 of those 8 boxes filled. And they're all trading the future, all being most bullish bracket are trading the future, and about half of them are clearing that future. So that's 50% coverage of this whole matrix. But what I'd say in 2022, the herd is closer than it was in 21, believe it or not. Ignore the price because they move inch by inch.
Yeah.
That's just the fact.
And the storing it, that's going to take a while. I mean, that's pretty sophisticated. They want nothing to do with that for the most part, I think.
Well, we could do with the SEC maybe changing their rule, because at the moment it has to be recognized as a liability, right?
Well, I want to talk about the SEC, but just to stay on this question of how to kind of get the herd to come, those that have still resisted. When we talk about institutions embracing crypto, I mean, there's buying it and holding it and investing in it. There's also actually using blockchain tech, right? And I mean, I've been covering this industry long enough to remember that 2018 was this cycle that we used to call blockchain, not Bitcoin.
That's right.
Right? I hope that doesn't trigger you, Christine. Remember that? Certain institutions, they say, oh, we like blockchain. We're testing blockchain. We're doing a blockchain pilot. Cryptocurrency, maybe we don't want to touch that. But we're making our own blockchain. And of course, what the crypto purists would say was, well, that wasn't really blockchain, because if it's a closed ecosystem and it's permissioned, that kind of defeats the purpose. Are we, in some ways, kind of back to hearing that narrative again? Or do institutions understand, there's the Bitcoin blockchain, there's Ethereum, there's multiple blockchains, there's proof of work, there's proof of stake. Is their understanding maturing?
Yeah, sure. I think from my perspective, having seen all of it in the past half a decade, is that, yes, on one side, the pendulum swung to blockchain, not Bitcoin, right? Like, we're in it for the software, but definitely not the asset class. But in the various bull markets that have occurred, then it's almost like the pendulum, at least in this most recent bull cycle, swung to the other side, where it was all about the crypto asset class. No one wanted to talk about blockchain technology or real world use cases. And in fact, TradFi is a liability. It's like, don't even want to talk about like being anchored to reality. Like, this is like something new, and definitely don't want to get in the way of like, the new world order that's being built. I think with some of the recent ecosystem collapses, that were not necessarily anchored in, I guess what we would think of as traditional market fundamentals. You're probably seeing a balance of like a rebalance where it's probably right in the middle. And this is where I hope we are going to play, which is a space where it's distinctly crypto native, where it distinctly uses the crypto infrastructure that has been built, that's open source, that that is innovating quite exponentially given how it's being developed, but has some anchor to traditional markets, traditional asset classes, real world use cases, and real world assets. So not too far on this side, not too far on this side, a new space where you will see new asset types, new products, but they'll be anchored in reality and anchored in traditional financial principles.
Yeah, David, I mean, I got a couple TradFi people up here, or at least originally TradFi, and it's true, amid the bull run of the pandemic for crypto, and it happened, hand in hand with the retail investor revolution and Robinhood and Stonks and Reddit and GameStop, there was a movement sort of against all the TradFi old institutions, the boomers that don't get it. So I'm always interested in that tension between crypto going mainstream, which is really the salt to audience, deciding that we care, we're interested in crypto, but also still being the kind of degens, as they're called in DeFi, who have been in it since the beginning and are all about, outside government control, outside regulation. Is that a tension that you kind of witness in your interactions?
For sure, I think I exist right on the interface of that tension, because you look, gray-haired old guy in TradFi, launches LMAX Digital. Okay. This is how much we traded. Where do you sit, David? Look, I love the concept. I read the white paper, right? 14, 15 years ago. Read it. Decentralized, trustless, great. Well done, everyone. Now, we need to get more of the world's traditional assets directed towards crypto. That's success for the whole industry. Today, we talk about $1 trillion. Wow, it's nothing. Right? There's $200 trillion of assets in custody in traditional finance. So to edge along the path to adoption, we're going to need to be pragmatic, right? The degens, the crypto evangelists, they haven't solved credit. They haven't solved Hashtat risk. They haven't solved that delivery versus payment or settlement risk, right? So whilst we're solving that, we're going to have to be pragmatic, particularly in the two main areas, regulation and credit. We're going to have to be credit and have that merge of TradFi and crypto or DeFi, right, if we want it to grow. So just talking my own book a little bit, the sixth exchange we launched this year, start of Q1 this year, was in Singapore, SG1, what a great name. But it's the first exchange we've launched in the last decade that has fiat and crypto side by side, under the same regulatory banner. That's a pragmatic approach.
And that's outside the US.
Correct, because the US is difficult, right?
The US is different. Let's talk a little bit about regulation in the US.
Oh wait, but if I might just add to complete the thought, I think we need degens to push the envelope and to challenge the system, and that's exactly what they've done. And then, for the institutional players that are working to build the infrastructure that exists today for institutions, that's taking, kind of like certain parts of the envelope the edge that's been pushed to, a broader audience. And I almost think that it's like a two-part wave. Like, you need to push the envelope and challenge and definitely evolve the technology, but then there's all of, I guess you would consider like the regulatory stack, like behind. And so, kind of see this as like a two-part thing. Everyone has a part to play.
It's like adulting, bring the maturity level to the foundation they built.
Yeah, but I mean, it wouldn't work any other way, because I wouldn't think that incumbent players would be able to challenge themselves the way that outsiders can.
Yeah. Okay, regulation. Let's talk about the SEC, and it's not just the SEC, it's the CFTC, it's the Biden White House, which put out, a big executive order that basically just said, let's all get on the same page about this. A few months back, said, hey, all you agencies, let's figure out how to set up guardrails. And one thing I've been saying for, quite a while now when people talk about the kind of boogeyman of regulation in crypto is, regulating the space is not the same as shutting it down. Almost none of these people have said, shut down Bitcoin, which they can't do anyway. We want to get rid of this. They've said, we need clear regulations and guidelines. Now, more recently, though, those guidelines have not looked very friendly to crypto. If you are in the crypto space, you are not pleased with some of the rhetoric you're hearing. Even years later from the ICO boom, everyone remembers ICOs, initial coin offerings, the SEC is still going after companies that did those, that did token sales. We're trying to figure out which tokens Gary Gensler thinks are securities and need to be registered as such. When you look at all that, is that another hurdle to institutional adoption? Or is it kind of something that can be spun in the positive, which is, well, once they figure out the regulation, that's when the herd comes in?
I think it's a bit of both, right? Regulated markets are a good thing. And by the way, enforcement is part of effective regulated markets. But let's look at the United States, and let's look at the United Kingdom, because I cannot be critical of the United States, because we're in exactly the same situation in the UK. There's a lack of regulatory determinism. That's only one question you've asked there, which is, well, Mr. Gensler's asking, is it a security or not? For what it's worth, I think Bitcoin's a currency and the rest are securities, right? But it would appear that I'm wrong, and they're saying Bitcoin's a commodity. It's okay, just give us the rules of the game. But I think there's one step above that, which is important. If you want this market to have credibility, we must globally protect private investors. We do it in every other asset class. Currently, there's zero protection, right? Zero protection. That will only boost the credibility of the market, and then we create a framework that we're used to. Those frameworks exist, by the way, for the institutional market. You tell the institutions the rules of the game, and they act within it. One word of caution for all the governments and all the policymakers around the world: if you don't get it right quickly, you're going to lose it. Very simple. The three biggest custodian banks in the world are American. They control half of the assets in custody today. Recognizing those digital custodian assets as liabilities isn't going to work. And you're going to lose that whole business to the Middle East, to Asia, or someone else in Europe. So let's get a framework. We all understand how to work in those frameworks, and then you can maintain your space as a leader in global capital markets.
Speed is not usually their forte, though.
Correct.
With jumping into something new. Right, Christine?
Yeah, no, I think I agree with David in that it's two sides to it. I think that a lot of the barriers to entry for some of the institutional players is needing regulatory clarity and guidance. But as soon as that develops in whatever way it does, I could definitely see it open up the institutional markets. I mean, in some ways, then the opportunities are different, if that makes sense. But it would be exciting to have that. So definitely welcome that.
It's good if we can to talk just a little bit about news happening right now. I don't want to get too techie when it comes to crypto, but in the crypto world, we're all eyeing something that could happen as early as tomorrow, and that is the Ethereum merge. So without getting too in the weeds on that, I think the average person who's maybe invested, whether retail or institutional, who's invested in crypto is just wondering, well, is it going to make ETH moon? Is it going to make other crypto assets moon? Is it going to be good for the crypto market? And we on the news side stay away from price predictions. David, backstage you were saying it's probably not going to do much of anything. I think a lot of people in the Ethereum world are hoping it will do something. But Christine, let's start with you. I mean, you've been in this space for years watching this stuff. What are you expecting this week from the merge event?
Yeah, I'm just kind of thinking of it as like a technological upgrade. But I mean, from my perspective, I'm taking a longer view, right? Like I've been in this space for over half a decade, and so not really that focused on the day-to-day price movements. Like perhaps there'll definitely be some volatility. There definitely is going to be some retail activity around it. But overall, I think that it's difficult to move the markets these days. I mean, there's a lot of pressure, not that is even a lot that's like crypto specific. There's like a broader macroeconomic environment that is impacting the crypto markets today. So perhaps some volatility, but otherwise just thinking about it as a tech upgrade.
A whimper, not a bang, David?
Slightly longer time horizon, a week or two, yes, it'll be a whimper. But my advice to customers, our advice to customers out there, not financial advice, is be careful, because a lot of people are just storing their ether right now, right? So any move is going to be exacerbated. So you could see a lot of volatility in very thin markets. When the merge is done, I think you'll just go, pretty much, unch, right? it's exactly what we thought it would happen. But I'd say just be careful over the next 24 to 36 hours.
One thing we've been dancing around, and I like to always touch on, especially for audiences like this, is kind of the ongoing challenge of explaining crypto to normies, as we call them. I mean, when we talk about institutions, that's another big one. We've been talking about why institutions might be a little nervous to get in and why the herd might still be resisting. But what about just, on a day-to-day, how do you guys tell people this is a real thing and this is something that's going to continue to exist? I mean, it's certainly a challenge I face, and because of the last 6 months, you alluded earlier to certain collapses. We can name them, Terra, Celsius, some of these big lenders that were just way over their skis. But because of the last 6 months in crypto, I think it's given, as you said right off the bat at the beginning of this panel, it's given people who already were skeptics more fuel to basically say, it's all a house of cards, I don't want to touch this. And I'm sure a lot of people at this conference, crypto, it's so volatile, it's so dangerous, I don't want to touch it. What do you tell people, even just friends who push back and ask you about that?
Yeah, I mean, from my perspective, again, taking a broader view on it, is that, I'm thinking about crypto, blockchain, digital assets, that whole category of, I guess, what we'd broadly call Web3. I don't know if that's a cool term anymore. Things are changing.
Right, it's already on its way out.
Exactly. Like, so passé, so tradfi to say that. But, thinking about this broad category of Web3 as the next internet of value. The internet that we know of information being the set of technological protocols that made information creation and distribution 24/7, 365, global, democratized the creation and distribution of information and content. All that paradigm, and then potentially disrupted some of the information gatekeepers if they didn't evolve. Lift and drop that paradigm shift from the technology evolution. That doesn't stop, by the way. It doesn't stop like when the price goes down. Yeah. Like maybe it slows down, but as far as I know, investing in the space, talent that's going into the space hasn't at all slowed down. And so lift and drop that paradigm shift into value transfer. That impacts capital markets, payments, lending, everything in between, right? And so, and the interesting thing is, in the Internet of Information, the largest companies were built in the span of just a few years, right at the cusp of those technologies becoming mainstream. And perhaps, I'm not saying we are, but perhaps we could be at that cusp. I mean, I've been at this cusp for 6 years now, but
the cusp
perhaps,
of the cusp.
Yeah, exactly. So, basically, especially. My positioning, I've always been on the side of TradFi, but always to be ready for this new internet of value to make sure that we are the ones that are not disrupted, but in fact the ones that are leading. But some of the things that I mentioned, in the information side have already been being seen on the value side. Like you mentioned ICOs, certainly not registered securities, but definitely a demonstration of democratization of the creation of value, where people could raise hundreds of millions of dollars within minutes around the world.
Yep.
So anyway, yeah, that's kind of how I would explain it.
What do you tell skeptics?
Look, we've got to simplify it. As an industry, we've got to simplify it. There's too much jargon. It's really hard to understand. Our job, really, certainly from an exchange operation perspective or from a brokerage perspective, is to have frictionless market access. So to those skeptics, it's like, well, what do you have in your portfolio? Do you have marijuana stocks? Do you have bank stocks, right? Do you own some gold? Do you want to own some Bitcoin? Yeah, but let's make it easy for them to transact. Mm-hmm. And guess what? Guys, you shouldn't have to understand custody. You shouldn't have to understand...
Or blockchain even.
Blockchain settlement.
It should just work.
Do you understand when you buy gold, right, what actually happens to a bar of gold? Does it move? So it's our job. We need to explain it better to people, and we've got to provide frictionless market access in the years ahead if, again, we want this industry to grow to where we think it can be.
Smart. I like what Christine said about the next generation of the internet. It's very hard to see it when you're in it. It's very hard to see down that road. Can we give a round of applause to these two smart folks? Thank you.